Sommers. I'm a tax attorney in San Francisco, and welcome to Boomer Bob's Tax Cafe and Coffee Bar, where we drink lattes and talk about tax. Today's subject is, all right, you crypto users, the tax man is coming. So, for those of you who thought, gee, I'll use cryptocurrency to hide my transactions and the government will never find out, think again. IRS is aggressively pursuing transactions involving cryptocurrency, especially those where cryptocurrencies are being used for purchases of goods and services. Let's go over a couple of examples. Let's say you decide to pay your employee in cryptocurrency. Well, those are considered wages, and even though you paid in cryptocurrency, you owe the IRS all the employment taxes you would have owed had you paid in cash. Another wrinkle, if you paid, let's say, $2,000 to an employee as wages and used cryptocurrency you bought for $100, you have a $1,900 gain. I'm not going to go over the taxation of cryptocurrencies because there's a lot of information on my website covering this. Let's go over another example. Let's say you have an independent contractor and you pay that contractor $50,000 in cryptocurrency. Again, outside of the tax gain you have, let's say that currency then drops to $25,000. You send the contractor a Form 1099 for $50,000. The contractor protests and says only $25,000. He puts $25,000 on his tax return. You put $50,000 on yours as the deduction. Now you've got a discrepancy and a potential audit of the two of you. However, it gets much worse. The IRS is contemplating using their programs they have in place for cash transactions and using that program to track cryptocurrencies. Currently, if you do a cash transactions for more than $10,000, the recipient of the transaction, who's receiving the cash, has an obligation to file a report with the IRS. That same rule the IRS is trying to put into place with cryptocurrency. That means any transaction of over $10,000, eBay, Amazon, any other purchase or sale, that person getting the money will have to report it. Well, you think you might get clever and say, well, gee, let's give an example. You're going to buy a car for $50,000 in cryptocurrency, and you say, well, gee, I'll pay you $9,000 in 5 payments and $5,000 in the last payments for $50,000. You've just committed a felony crime. It's a crime to structure a transaction to avoid the reporting requirement. Thus, the reporting requirement itself is relatively innocuous compared to the crime you'll be committing if you try to structure. Don't believe me? Well, a well-known politician went to prison for 15 months for structuring a cash transaction, even though it was his own cash. Just let me give you an example of how this might work, okay? Say, again, you purchased this car for $50,000, and let's say you purchased it with $5,000 of cryptocurrency, that was the value for you. Get your tax return, it asks if you have any crypto transactions, you say no. You lie on your tax return. Then you don't report the transaction involving the car. You've just committed felony tax evasion, and the IRS has you dead to rights if they find out about this. And they will, because the car company will report the transaction to the government. Here you've lied on your tax return and you failed to report $45,000 of income. So in conclusion, even though you think you can outsmart the IRS, you're really playing with fire. The best approach is just honestly check the box yes if you have cryptocurrency transactions. Be sure to report them, and don't ever try to structure your transactions to get under that $10,000 limit. If you have questions on this or any other subject, please drop me a line. If you thought this video was informative, please like it on YouTube. Please visit my website for information regarding cryptocurrencies, non-fungible tokens, or other tax issues. Until then, this is Bob Sommers from Boomer Bob's Tax Cafe and Coffee Bar saying, I hope you attend my next session.